Hey Credit Warriors, Credit Shifu here, and in this video we are going to talk about taxes. And no, sorry, I'm not going to show you my actual tax return, but we are going to talk about all the tax deductions I took, and tax season has just finished. April 15th was the deadline. I in fact did my taxes about 6 weeks ago. But anyway, we're going to go back through and we're going to have a look at all the deductions that I took, and it might give you guys some ideas for how to structure your business if you're self-employed, or for next year, what deductions you're going to take on your taxes. So let's go. So first of all, we'll look at the structure of my company, and do remember, for this business part and for the personal stuff that I talk about later on, this is just for educational purposes only. So if you want some advice for your specific situation, don't just listen to this video, go and, talk to your CPA, a certified professional. Okay, so I was running my company as an LLC. I'm a 50% partner in it. I have a business partner as well. So it's an LLC, which is a type of business structure that gives you limited liability, and it obviously gives you the ability to deduct things. Now, as of January 1st, 2019, I will be running my business, or I am now running my business as an S Corp. Different type of business structure. I'll get into why later on in the video, but last year I was running it just as an LLC partnership. Now, LLC, in addition to limited liability, it gives you the ability to have deductions, okay? So to deduct business expenses. In fact, you can do that as a sole proprietor anyway. But yeah, so the first thing is deducting business expenses. Obviously, the rent that we pay for this office is a deduction. The software we use to edit the videos, anything we've bought, like this TV stand, the computer that's down there, the TV here, everything, the lights that you're seeing right now, all that, it qualifies as a business deduction, okay? So it's not considered profit, you're not taxed on it. But there are a few other things with small businesses that can kind of blur the line between personal and business expenses, okay? Which is to your advantage because it means you kind of benefit from it, getting certain things tax-free that you wouldn't normally be able to get tax-free, okay? And this is talked about in Robert Kiyosaki's book, Rich Dad, Poor Dad. All right, he goes into a lot of detail, so if you are interested in this kind of stuff, you can go and read his book. But I'll kind of summarize it for you here. So basically, if you take a business trip, because you're a small business, that business trip may also double as a family vacation, okay? So I could give you an example from Robert Kiyosaki's book, is that he would go somewhere to have a meeting, but he'd also take his family and he'd then extend the trip and make it a family vacation as well. And so he could actually deduct his flights because he was actually going for a legitimate business meeting, but then at the same time he took his family and did their vacation, so they had a tax-free vacation, okay? That's basically the concept he introduces in his book. So the way I do this, and do be warned that if you go to town with this and do this too much and really do something that kind of is over the top, the IRS are not going to like it, all right? So you got to play within the rules. These things do actually have to be genuine business expenses, but they can kind of merge with personal stuff. So for me, the way I do this is that I make videos, right? I review travel products. So I review business class, first class, hotels, etc. So whenever I go and stay in a hotel, normally I use points, but sometimes I may have to, add an extra night using money. So if I do have an extra night, I can deduct at least one night, okay? Because if I've made a video about it, I would have to have stayed in that hotel for at least one night. So like the most recent Hyatt Ziva in Cancun, I paid for one night with cash, $500. That's deductible because I made a video about it. I had 2 more nights, which were paid for with points, which I'm not able to deduct, obviously because they're points, but even if I paid with cash, because it's a family vacation, I feel I could only really deduct one night because that's all you'd need to do a video about. Same with business class flights. Last year we went to Israel, flying business class on Swiss Airlines. We paid cash. I couldn't really deduct my wife's ticket or my kids because the IRS are going to be like, what's your kid doing? Are they a cameraman for you or something? No way. You can't use child labor anyway. But certainly my ticket, because I made a video about it, which was a product which has gone on to make money, I could definitely deduct my own ticket, because otherwise how would I make a video if I hadn't had that expense of buying the ticket? But we were going to Israel anyway to go to my business partner's wedding, so it was kind of like a personal trip merged with business, and thus you get the result of having kind of like a personal vacation with pre-tax dollars that aren't taxed because you are actually doing some business there as well. But remember, this is just educational. If you want to do this kind of thing, talk with your CPA first about it, see what they think is acceptable. All right, now let's go into the personal deductions I took. So obviously I am married, filing jointly. We took the standard deduction of $24,000. Now the standard deduction is great. Obviously it's $12,000 per person if you file singly. And if you're married, that's just added together. Now don't take that for granted because not all countries do that. The United Kingdom, for example, it doesn't allow you to do that. If you're married, it allows you to put about £1,000 from the deduction, the other person's deduction. If only one spouse in a couple works, you can take about £1,000 over. You can't take the full 12,000. Okay, their deduction is about £12,000 each. But if if only one person works, you can only get 13,000. You can't add it together and get 24,000. So don't take it for granted. It is a great thing that the US has with that standard deduction, married filing jointly. Right, next we have the child tax credit, which is $2,000 per kid. And I have 2 kids, so it's $4,000. So the government's basically paying you $2,000 just for having a kid. It's crazy, right? Just giving you free money, socialism. But yeah, that's basically what it is. And this credit is refundable. So it means that, well, I should say a portion of it is refundable. $1,400 for each kid is refundable. And what that means is if you haven't if you haven't paid more than $2,000 in tax, you'll still be just given, let's say you paid 0 in taxes, all right, because your income was too low. The government will give you $1,400. You'll just get given it as a tax refund, even though you haven't paid that money in taxes. That's what refundable means when we're talking about tax credits, okay? And there are 2 things going on here. You've got deductions and you've got credits. So deductions, like the $24,000 deduction I talked about, that just reduces the amount of money you have to pay tax on. And credits, that's money that is actually going to get chopped off your taxes or refunded to you if you haven't paid that much in taxes, if the credit is refundable. Okay, so I got $4,000 chopped off my taxes because of those child tax credits because I have 2 kids. Okay, now we have the dependent care credit, and I was able to get $1,050 chopped off my taxes because of this. The way it works is for each kid that you have in childcare, you are able to get a credit for 35% of $3,000 total for that child, okay? And that's just given back to you as a credit. So 35% of $3,000 for one kid, that's going to be $1,050. Now, to put this in perspective though, I spent $17,000 on childcare, okay, for baby credit Shifu number 1. Baby credit Shifu number 2 is not at childcare, she's just, at home with her mom. And yeah, so it was a huge amount. It was great to get some of that back. It was almost, maybe like a 5% discount, I guess, what I got on my $17,000 childcare bill. It is insane. And just one thing for this credit as well, both partners have to work. So if your wife does not work, or your husband does not work, if one spouse does not work, you can't get this credit. I guess, because in theory, they could be at home taking care of that kid, right? So it's only if both partners work. And very luckily, Mrs. Credit Shifu did a little bit of freelance work last year, which got her, marked as working. So that's how we were able to get this credit. If she hadn't worked, we wouldn't have been able to get it. Next, we have the qualified business income deduction. And this is from the new Tax Cuts and Jobs Act, or, colloquially, the Trump tax plan. And basically what this is that you get a 20% extra deduction on pass-through business income. So an LLC, also an S-Corp, these types of businesses are called pass-through businesses. The business itself does not pay taxes. All that income just passed through to you and you just pay personal taxes on it. So it's not double taxed like would be with a C-Corp, okay? I won't get into that, but if you want to know, I have a video on my Business Shifu channel that you can check out the difference between S-Corp and C-Corp. But anyway, so LLC is a pass-through business structure, so you get a deduction of 20%. Now for me, this was worth, I'll put the numbers up, it was worth $11,153 as the deduction, and I'm just going to say my tax rate last year at the top end of my income, when you consider, income tax, FICA taxes, and the state tax altogether, it's around 30%, so I would have saved around $3,345 from this deduction. I also took the home office deduction because I do have an office at home. You see most of my videos are not shot with this background, they're actually shot at home. So I took a deduction for that. I was looking for my tax return. I couldn't actually find it because it's just so complicated, so many pages. So I'm sorry, I wish I could actually put the amount on screen for the deduction, but I couldn't actually find it. So anyway, moving on. My next deduction is a depreciation deduction, and that's basically for the depreciation of equipment, okay? So there were several pieces of equipment at home. My big iMac that you normally see in my other videos on screen. We have a Canon 5D Mark III camera. I'd never claimed depreciation on this equipment on any previous return, so I decided to do that this year, and I was able to get a deduction for each piece. So for the camera, it was $1,143 in depreciation. For the iMac, it was $800. So together, I got an additional deduction of $1,943. So that means $1,943 additional dollars of income that I would not pay taxes on. And lastly, because I am the credit Shifu, I obviously have to have credit cards to make all these videos and do all this stuff. So I deducted the credit card fees that you pay. I didn't do it through my business, so the way I did it, and you can actually do this too, if you've done a lot of referrals for American Express, they'll actually send you a 1099 form. We did a video about this in the past, and they value Amex points at 1 cent per piece. And so they sent me a 1099, well, 4 or 5 1099s actually. Each one was for $550 because I'd maxed out my Amex referrals. But what I did, I deducted the annual fee for each card. So for the one for the Amex Platinum, it was actually net zero, okay, because I deducted $550 because that's the annual fee. For some of the other cards, that are around $95 annual fee, or the gold card, $250 annual fee, that's what I deducted. So, for that one, it would have halved the amount. And these 1099s, you report them on Schedule C, just like any other sole proprietor business that you would have. And then lastly, I'm going to talk to you about a deduction I kind of messed up with throughout the course of the year and ended up having to pay back about $2,000 to the government at the end of the year. And that is the premium tax credit, okay, so a health insurance premium tax credit. So I run a small business, so we get our health insurance through Obamacare, the health insurance marketplace, that lovely website. And basically at the beginning of the year, I grossly underestimated how much money I was going to earn this year, which, that isn't a bad thing. I'm not complaining. Earned more money than you thought you were going to do. That's a good thing, right? But because I underestimated it, it meant that I was getting more assistance from the government than I should have been to help pay for health insurance costs, and I ended up having to pay some back. So by the end of the year, once all my income data was in and we had a proper level of income, I would only have been entitled to $67 per month in assistance from the government to help pay for the premium, okay? But for the first several months of the year, because I had grossly underestimated how much money I would earn, I was actually receiving $436 a month to pay towards health insurance. So actually, by the end of the year, I owed the government $2,014. So that was added to my taxes at the end of the year. I had to actually pay that back. Now, this would have been worse, but I actually did update my income twice throughout the year as I saw it was growing. The first time I updated it just was to solve this problem. And then towards the end of the year, I actually started updating again, and I started using the website to try and get my kids out of the Medicaid system. So I don't know if you guys know about this. Those of you who work for companies might just have family plans through your company. You might not have to deal with this stuff, but if you're self-employed, basically your only option for health insurance is the Obamacare marketplace. And if you're on a low income, or actually even some medium incomes, your kids, you might not be eligible for it, but your kids will be offered Medicaid, which is this, it's health insurance for low income people. And actually it's a great thing for genuine low income people because it gives them insurance that's often free, like totally free. So it's really great for those people, right? But as you walk up the income ladder, climb the income ladder, I should say, and your income rises, the Medicaid deal isn't quite as good. They want you to pay for it, and they do not allow you to just get regular health insurance for your kids through the marketplace. And the Medicaid people in New Jersey, they are awful. It's just the most terrible thing ever, okay? Like, we tried to apply for it. They got my wife's name wrong 3 different ways on the application. We applied for our kids. First they were denied. Then we were like, no, this is what they did. They doubled my income. When I sent in my documents, they failed to realize that I was a 50% shareholder in my company, so they attributed all the income to me. They like doubled my income. And I pointed out to them, look, you guys even looking at these documents? 50%, you see that written clearly right there. Did you even go to school? It was crazy. Obviously, I didn't say that to them, but that was what I was thinking. Literally on every interaction with them, they made a mistake. Every single interaction. They spelt my wife's name wrong 3 different ways. And so, yeah, it's a bit crazy. But in the end, we were offered this plan we had to pay $150 a month for. it would have been cheaper just to get a family plan through the marketplace, but the marketplace wouldn't let us, okay? So what I did was I actually just kept entering higher and higher incomes until I crossed the threshold where it wouldn't offer me health insurance anymore. I ended up entering an income of $96,000, which is a little bit higher than we were. Not that much higher, actually, a little bit higher. But that was a threshold that it, denied our kids Medicaid, and I was like, yes, I'm out of this awful thing. I can finally just buy them regular health insurance. And in addition, another thing that me and my wife did last year to cut costs, and I don't recommend doing this, but for the last couple of months of the year, we actually canceled our own personal insurance for the two of us and just went without health insurance for the last couple of months. And we were like, be careful when crossing the street, don't jaywalk, don't crash the car, just, be super careful for the last couple of months of the year. Anyway, I'm just kidding, probably you shouldn't do that, but that's actually what we did because we've been saving up for a house and stuff. So guys, I hope that's a pretty cool little video just detailing some of the tax deductions you can take. Obviously, there are additional ones, for example, like contributing to an IRA. I did that the previous year. I actually didn't do that this year because I was saving up for a house. But if you do want to see a video on that, on the the tax refunds and tax deductions I got the previous year, I'll put the video for that just on the end of this video and you can click. All right, guys, please leave some comments below. Let us know what kind of deductions you were able to take. I'd love to hear your stories. Make sure it's all legal, of course. You don't want to incriminate yourself. Please subscribe if you're new, and we'll see you next time. Bye-bye.